RHB Asset Management Sdn Bhd aims to grow its asset under management by 19%, from 48.5 billion ringgit last year to 58 billion ringgit this year. Its Chief Executive Officer Ho Seng Yi said the growth will be driven by 16 new funds that will be launched this year. Currently, the fund management company manages 149 funds, which include 12 Islamic funds. The Islamic funds account for 11% or 5.46 billion ringgit of its total portfolio, while the conventional fund account for 89% or 43 billion ringgit. RHB Asset Management has operations in Malaysia, Singapore, Indonesia and Hong Kong. Geographically, Malaysia is the largest contributor to its portfolio with assets worth 42.6 billion ringgit. This is followed by Singapore with assets worth 4.9 billion ringgit, Indonesia with 940 million ringgit, and Hong Kong with 80 million ringgit. Ho said, given improving global growth, the equity market remains as its preferred asset class. He added that the fund management company sees high growth in manufacturing, construction, and infrastructure.
For example, manufacturing, where they could have a lower cost, all right? We also would like export sector, where we believe that exporters, because our ringgit is weakening, things could be a bit better for them. And also we like construction, as the ETP projects are still ongoing, and as we're aware, government is not going to reduce any capital expenditure.
Ho was speaking to reporters after launching the RHB OSK Global Equity Stabilizer Fund in Kuala Lumpur. The ringgit-denominated fund is jointly managed with Singapore-based Schroders Investment Management. The Stabilizer Fund is designed to protect investors against volatile global equity markets corrections. RHB said the fund has a downside risk protection strategy that is straightforward. The fund targets to reward investors of dividend payments between 3.5% and 4% per year on a quarterly basis. RHB Asset Management will use criteria such as return on assets, return on equity, net leverage and operating cash flow yield to measure the performance of a particular equity stock. Ho also cautioned investors to take note on stocks that are sensitive to rising interest rates, given market volatility and uncertain external situation. Suhli Azman, The Edge TV.